Good afternoon. Today is Thursday. It's the fourth day of a full week. It's August 22nd, 2024. Our goal here today is to review the market generated information in a holistic fashion. We are intimately following the auctions narrative for both ES and NQ. If we have time, we'll theorize and add additional commentary towards the end. We did speculate in the market today. Please see our video if you like. It contains my real-time analysis, including the DOM. We do use these archives as a tool for our professional development. All right, let's begin. So we'll start off with our summary questions, our typical questions. Where is the market coming from? And what was the goal? So again, do recall we've been doing our higher highs and our higher lows. This is the monthly candle. And of course, you'll see how we finished. We Again, we came from our bull flag last week, just again, so we can just have our context. We started with the bull flag as of last week from the lows at the beginning of August, pushed our way. We had another impulsive week up, rally base rally the whole way through. As we get into this Thursday, Wednesday, Tuesday, Monday, we started Monday continuing that same rally base rally pattern with an impulse to start Monday and then a basing period. And then we tried to rally, but we failed. And again, you can look at the review for yesterday. We notated a lot of action that we'll hold off for now, but it's incredibly important. Some of the clues that we were picking up, mainly with the delta that we've been harping on for the longest here and here. But I digress. So the whole story is we're still doing our rallying and we're possibly basing for the Jackson Hole event, which is tomorrow at 10 a.m. Eastern. So ideally, the goal would be just the whole price is higher. You know what I mean? Hold prices higher, if anything, protect the low of the Monday. That way we can stay within this relative range of this weekly candle, because this would be extremely bullish regardless of this sell-off that happened today, and we'll look at the context and how it happened. Staying above this range here for our week would be pretty bullish overall. Anything can happen, but just context of where we're coming from. Rally base rally at the highs, consolidation, and the goal was to build volume higher and hold above at least at 50. And the buyers failed that today. We look at the monthly candle for the NQ, and then we have our weekly, and then we have our daily. Same situation, rally base rally, so on and so forth, testing in these previous July levels here. And as we notice, NQ is much closer to their lows for this Monday session than ES. So if we want to understand the differences between those, let's look at the sector tracker, and we'll also see what we had on the docket. This will be the earnings. Not really too much that we can say about here for Thursday. For the data, we did have our initial jobless claims, which we'll see how we responded for the scene of the crime, the SOC, for all of these, 5:30, 6:45, and 7 o'clock. PMIs, fairly important. I think I undervalued these. Definitely a lesson that has been learned. And then tomorrow we have our Jackson Hole, and then the new home sales as well. The main event is going to be this Jackson Hole. Ideally, this really should be pretty tamed and mild, but the market is where it's at now, and who knows? Anything can happen. And then we have our sector tracker. So the S&P 500 ended 90 basis points under, almost a whole percent. I think the NQ went down about maybe like 2%. I'll have to double check. My apologies. So again, you can just take a look at this and pause, and you can see what's the health of this. Where is our downside coming from? It's primarily going to be technology. We're going to have discretionary, which really should have been Tesla for the most part, weighing us down. weighing down the market. That is, Tesla was down 5.5% and about 2.2 for Amazon. This is something that we've been watching overall, just watching the consumer and discretionary field. They've had a lot of gains to possibly give back, so some of that could be profit taken as we head into Jackson Hole. Who knows? I think that's incredibly important for the narratives standpoint as well. I think it's healthy for us to have a pullback with this intense rally that we're looking at. I mean, there's been no pullback. There's been consolidation for sure, but not an actual pullback. And this isn't too much compared to the move of 600 points from the lows, basically over 500 points. So looking back at the actual sector tracker, we had communications, which we know is going to be Google, Meta, so on and so forth. Discretionary, like we look, some in retail as well. Our defensives held pretty well. Defensives being the consumer staples, the industrials, the materials, even utilities. So this is nice overall. They did their job. This is why we're always looking at them. And with the main downside being technology. And technology, it was like Nvidia down 4%. Yeah, 3.7. We have Microsoft at -2. Mainly the chips were getting sold off today, down 4% for AMD. We got Broadcom as well. You can, just keep going down the list. Don't really care too much about real estate and energy. But shout out to them. They did really well, I guess. But again, the main downside is going to be the technology side of portions. So overall, very solid day from the breath. If we didn't have this sturdiness from our defensives and our financials, which we've been really keeping an eye on, financials and healthcare, this would have been a totally different day. So overall, very tamed. Don't want to lean to the bear side as of right now. You need more information. That's always the case. But this is a nice showing from the breath day. Just looking at um, the overall breadth. So looking at the actual specifics of these daily candles, we can look a little deeper and go into the NQ. So again, the ranges are getting a bit wide, so just bear with me. So we have our higher delta, which is starting to creep up, which we've been talking about, doubled, actually more than both of these together. Again, we've been talking about this for a while. This is the NQ, hasn't been as pronounced for specific levels um, that we've been talking about, but definitely for the ES, it was like 5620s, 5630s, and the 40s is really stacking in that same zone. So I can't tell you the numbers here from the top of my head, but definitely here in these 800 zones, we're finding these sellers around the 900, between 800s and 900s. We're finding a lot of nice sell value. To be honest, I actually may make a drawing here and reference this later on because I think this is going to be important. This is the actual 900. So yeah, this whole 900s to the 800s is really going to be key. So we'll make a note of that. We want to see if these sellers are going to reload or just this area as a whole may be resistance. You can even look at the profile that we have here. Just what this is just showing anything that's able to be seen on the screen. You'll see the volume here, and just with these candles here, just the amount of volume that's just there. So we can look a little deeper at the market profile, um, just for a little more context with that. It's not as clear in here. This is mainly focused on the delta. These are the sellers that we were referring to for the S&P 500. It's the 20s, these are the 30s, these are the 40s right here. So same situation that we're seeing from the NQ. We were just talking about it a bit more here. So although the delta was massive to the downside here and here, not as much here. There was a lot of profit taking and probably possibly just just new money buyers kind of coming in at these lows. So this definitely offset the delta, but you can see the great positioning that the sellers have for bar one, two. I'm sorry, for bar one, two, three, and four for this week so far. So very nice positioning for sellers. Um, I'll leave the who's in control for later on. Let's look at the market profile. Start with the ES. So just look at this from a higher time frame. Hopefully this looks good for you. Again, for context, we have last week's volume, we have this week's volume, which is mainly a P shape, really struggling to get above this high volume node here, above the 5660s. Once we get in, we kind of sell off just a little bit. If we recall what happened yesterday, again, we can look at the actual candles. I don't really zoom in too often here, but we balance, we reach up here, trying to get towards those 60s, and we fail, a lower high. Again, you can look at the review yesterday. So really, that was just more compression just added to this week. So just a lot of volume, just a lot of cluster here towards these highs. And again, we had this zone here, which would be for those sellers that were showing up, and just a high volume node that we're having in this area for the volume point of control for the week before this day. So as we're heading into today, same situation. We try to balance, and we have a little better advantage for the buyers, and we're able to test some of these prior ranges from a month ago or so, and we get rejected, and it's just lower highs and lower lows, same as yesterday. Except if you actually look at the DOM, and again, we'll look at this on the candles. If you look at the DOM on the replays, you could see these fools could not get past the 5644s for whatever reason. There was no willingness to get past this 5644s. I specifically remember saying this many, many times. So please go back and look at the session there. You'll have to look, and we can check on the candles so I can tell you where to look. But just an interesting note. There are no singles here. We're not seeing any one bracket trading for this price. It was nice, orderly fashion down, nicely auctioned. So no singles to draw there. We have our NQ. My apologies, I thought I removed that line. So NQ actually got above. They actually got above this red zone here, which coincides to pretty much the tip of this high volume node, and you're starting to get on the other side, and that just seems like as far as they really wanted to push it. So it's like, okay, again, you can see our real-time analysis if you kind of skim through the video from today, and you can just see the way that we were trading. But again, once we traded lower, there was no willingness to go back above, especially headed into Powell for tomorrow with who knows. That makes sense, that makes sense. So as we're just going lower, we do create a singles here. Absolutely no kind of retrace for this area. So we are going to create a singles bracket here. And that is from the 832s to the 855. So that's possibly an area that we're going to revisit as some people executed there. I haven't had a chance to offset the trade, so who knows? We ended up crashing through the gray area, which is the low volume valley for our weekly candle. Not much volume was traded here. We kind of just zipped through, not really auctioned well, hence the singles, which have been taken. And we're starting to build volume in this area. So again, pretty orderly outside of that little zip through here, which makes sense given this high pressure zone. But we closed below. We closed below this zone. But as we mentioned in our prep, this is simply right back to this high volume node of the last week. If we do get below here in this value area high zone, we have a lot of space here to kind of zip through until we get down to these really like 1900s, which is what it looks like. Just a thought. All right, cool. So we have all this information from a structural standpoint, from a higher time frame. I really wanted to make sure we go into detail with that to understand that, Yeah, this is a very nice sell day, but again, this is fairly lighter volume. We're only at 1.3 million and 602,000 for the NQ. So again, this is fairly light overall, but compared to this week and last week, that's more than what we've had since August 8th, which I believe is like a Friday. The Friday, yeah, last Friday, right? Or before, or 2 Fridays ago. I'm not sure. Actually, that was a Thursday. But I digress. All right, let's see. So we'll go ahead and look at the intraday footprint. And we just want to take our time today again. There's a lot that happened structurally that's been broken. Primarily, this is balanced more on a higher time frame. Literally, you have Monday, Tuesday, Wednesday, Thursday. We go up and we go down. So I mean, at this point, we closed basically where we opened. So again, this seems much more bearish if you're looking to the downside, and I get it. Very nice structure overall, but until we see continuation and follow through, you just want to kind of be tamed. So you can look at this on a DOM and see how this formed. We had a lot of sellers here, and they really pushed it harder for the first and the second bracket for these first 2 hours, and then we just couldn't trade any higher. Buyers pretty much gave up. There was no action towards the highs. All the value was found near the lower half of it, and then we just got more value towards the day. Notice the volume is still increasing, still fairly high, much more compared to the prior days. There's no trading near the highs, hence those singles, so on and so forth. If you look at the ES, you'll see the same situation. Only thing here is we're not exactly in a doji straight balance, where we did test the pretty much break even for the week. But we're starting to have some higher gravitations. Again, it was a little more of a downside to the on the tech side of things, as we saw from the sectors and just the candles. Yeah, these will be our daily candles. I'm sorry, these will be our 3 minute candles. My apologies. So let's look at the NQ here. So we're at 18 minutes. All right, I do want to add some additional comments. So that's the overnight session. We want to look at that. But okay. So again, if you can just pause and tell me what you see. So we're looking at it the same way every day. We had our balance for the prior overnight session. We opened near the prior IB mid. Again, you can look at the review yesterday. Basically the same situation, same kind of trading. Close at the IB high, but we did notice a little weakness, a little lower highs and a lower lows overall. But they held pretty well yesterday. You can look at the review. So we balance more after the close. Bounce off this higher IB prior IB high. A little loop down here. Still two-way trading, and we ended up opening. I'm sorry, we ended up two-way trading, and once we got over the VWAP, the full session VWAP, really much just trended above the VWAP once we actually started trading above. So we traded above and we actually stayed above here. We got above the 5 smoothing average. We ended up taking a little profit until this initial jobless claims. Initial jobless claims comes in. Really not too much excursion to the upside or to the downside, but there's more pressure to the downside than it was to the up. We ended up drifting up to see if we can get any kind of trade. As we drift into the RTH, we're opening almost near the overnight high, but we didn't break it again. Pushing into the RTH open. And again, you look at this on the DOM, you can see the opening for yourself. It's a nice little pressure upwards. I do recall saying, hey, be on the lookout for an open drive upwards. But as we looked at this was much more bearish. These bullish candles were turning bearish in real time. Again, please look at them. Um, we had our 6:45 PMI data, and we had not much excursion above, and still closed bearish. Basically ended up as an open auction, but even kind of sold off to end this bracket. We had our existing home sales data, I believe. That ended up being bearish as well. We're still just trading in this initial jobless claim zone. So I mean, at this point, we just break the damn area. And again, we had this part as a playbook. We just did not trade this at all. Just overly focused on the bullish side. As soon as we broke this range, we never looked back. We couldn't even test it. We're sliding down this 5 smoothing average this whole time, balancing, and we finally come up with the breath of trying to get trying to get some air, like you're being dunked in the pool, and then you just get dunked back in. And then at this point, just liquidation. You're starting to break prior days ranges. At this point, you're breaking the prior days lows, the IB low rather. And you're just kind of getting in some territory that people don't want to get in. You don't want to go into Jackson Hole. Um, Already negative that way. So I mean, at this point, this is just a straight liquidation day. We had so much balance from the sessions that we were looking at for Wednesday and Thursdays, and we pretty much just stopped these guys out. We had a impulse down, coil, impulse down, coil, impulse down, coil, impulse down, coil, impulse down. It's literally the same thing that we were looking at on the daily, but this is just a fractal version of it. You have your impulse, you have your coil, you have your impulse, your coil. So really the same thing. So very nice of a liquidation day. And the volume did increase. Anytime you see an impulse candle with the increased volume, like you're looking at 1 minute bars or what have you, you would say, hey, that has some significance. That does mean something. But hey, maybe that's the case here, but who knows? We'll leave that towards the end. We have our product that we just did. So we have our ES. My apologies. Hold on, let's clean this up, move this over. All right, same situation we're not gonna need to go over. So we already saw how we finished the prior days. So same situation, except we bounce off the prior IB mid. So it's a little weaker, you would imagine, as we head into jobless claims. Same situation here. Not much excursion, more to the downside than an upside. We drift up. Didn't quite break the overnight high. As we start the session for ES, they were holding a lot more, but we did notate, if I recall, let me actually double check this. They opened up quite similar to this A bracket here. I mean, this B bracket here, where we're just kind of coiling to the side. So that kind of caught our eye. We didn't mention that. This was just interesting. But we were kind of coiling, and then we ended up breaking down after that was the actual PMI data here. PMI data, so we ended up getting back into this SOC range, broke the high, closing in this zone, still trading here, ended up coming back up. As we come back up, above the VWAPs, above the IB mid, trying to close this balance strong, we get dunked back in under. So at this point, we are below our open. We are below the mid. So this will still be an open auction. But as we start off with our 7 a.m. data, no help. Tech is selling off. We're pretty much getting led down as we break under this zone for this SOC, for the initial jobless claims. We're just trading. We're just trading and coiling below here. So I mean, this is no different if you break the highs and you're coiling at the highs. You would imagine you have an impulse higher. That's the same case here. You end up having your impulse lower. Notice we tried to get back above, we got rejected. Tried to get back above, we got rejected. We can't trade. We just could not trade above here. And notice this is indeed at the 44s. These are the 44s that we were talking about. It's not like it was like heavy sellers here. From what we remember, like throughout this whole process, it wasn't sellers everywhere. It was just a lack of buyers to get above this level. I mean, once they would hit this area, they just stop. So interesting, just something interesting. Same situation, coiling, impulse, same thing. Um, we won't look at the overnight session. That's something for another time. So again, that's pretty much it. I believe we're done there. I did have a couple of notes I wanted to go over. So we've already talked about the Tesla. Well, we talked about the sectors and the equities. So we understand there. We want to be on the lookout for the chips tomorrow, and just technology and discretionary as a whole. We want to see if we have more downside pressure for Amazon and Tesla. So we'll be looking at for discretionary, XLY and XLK for sure. I did want to make a quick reference to the 5 day sector tracker. Again, do not be mistaken. We had 1 day for sure, and that was very mild relatively. There's a lot of subtle cues in there, but that's more speculative, and we're just going off the information that we do have. Jackson Hole and Powell tomorrow can do and change anything at the drop of a hat, by all means. But do remember for this 5 day, we're extremely bullish and we're seeing nice breadth overall. If you would told me that tech would have been down 30 basis points and LOL energy still, if you'd have told me that technology would have been down 30 points, 30 basis points, I would have told you I wouldn't have guessed we would be up 3%. So I mean, what else do you want the market to do? This is beautiful from a 5 day perspective. If you look at the 1 day, even still, the defense of this is why the S&P is weighted the way that it is. So just very nice overall. I just want to give a little more respect to this 5 day sector tracker and just show some appreciation for how everyone is working as a team. Great. uh, Regarding the Bulls and their complacency. We're just seeing just bullishness to the moon. We may possibly hit all-time highs today, so on and so forth. So no surprise here. We needed to take some kind of a pullback. This isn't the worst thing ever. It's a possibility that we may, for Jackson Hole, probably come down and test some shit like right here, at these 55. What is this? 55 half. 55.30s. So somewhere around these 55.30s or so, and that'll get you about in the middle of this range as well. Who knows? You can, maybe go all the way down here. Who knows? Um, but again, we definitely needed a pullback for the buyers. So it was nice to see the market kind of cool off and kind of get their shit together before Powell, basically. Let's see. We've already mentioned about Powell tomorrow. The one time framing has been broken on both sides, so that's important. We're no longer one time framing. So we're now at this point we're starting to make our lower lows. We did make a higher high on ES and in Q. So just a note there. We made a comment about the 5644s. We want to remind you guys about those sellers that we were talking about for the past several days for the S&P 500 and the Nasdaq. Let's see. I want to say this may be about it. So yeah. And then just a reminder for myself to. Oh, actually, this was a really good experience for the Dom. We have a good understanding of what not only the strong selling pressure looks like, but what it looks like when buyers are just unwilling to trade above those levels, especially after multiple times. I mean, buyers had just a slew of chances to get above these 50, 56, 44s. I mean, all the way from 7 a.m. to 8 a.m. We had a whole hour, and no one wanted to trade above it. We had a really good understanding of what that looks like, and we made several comments about it. So if you have some time, you can just kind of skim through. You can look for the second and the third brackets for our comments there. And then lastly, just a reminder to trade what you see and not trade what you want to see. We were overly bullish with our rhetoric and leaning to the bull side way too much. We as we were watching this in real time, we made several comments on the bear side of things and what it looked like, seeing how this was an open rejection reverse on the NQ. But just a reminder, just to trade what you see and not trade what you want to see, and just have your plan, have your risk management, take your shots, and yeah, just do your best to stay objective. So we're gonna make sure that we end tomorrow on a good note so that way we can be proud as we head into the weekend. We haven't been trading bad, not by any means. But just want to make sure that, if we do have a little bit of a rough day, that we follow up and make sure we end the week on a solid note. That way we can be proud and confident as we do our reviews. Enjoy your night.